Hey folks, welcome to the Market Internal Review for August 11th, 2023. Mostly a tight range bound day. We started off with a $2 gap down on SPY from Thursday's low. We had a bear tick extreme to start the morning off with add and vol both towards the bearish side. We had ended Thursday with quite a cluster of extreme bear ticks. Price bounced off of the standard deviation level here. I believe that's the second standard deviation low from Wednesday. So almost right on where we bounced. Headed back up to Wednesday's TWAP price and then oscillated from there. So to come into today, the gap down wasn't really much of a surprise with the data release at 8:30 basically being essentially neutral, although slightly less positive. And the first thing I noticed to start out was we were flirting with balance, but towards the bullish side of TRIN. And we had our, what's been more recent, I guess, lately is a classic case of missing tick on the other side. So whenever we have weak price, I'm noticing usually we have something like this, where there's tick highs above zero and tick lows below zero, but neither side is breaking the 500, or if they are breaking, it's very minimal, 600, 550. So this cluster right here. Okay, but when we have one side where it's completely void, basically the entire tick candle is below zero. It is somewhat common in the morning to start off that way, but when we are coming off of this kind of a ending day and a gap down, it'd be the inverse for upside, but I'm going to start looking for reasons that we would gap fill. So first thing I'm noticing, we get a strong engulf candle pushing up into the gap. So that's not been typical of the past mornings where we've had a gap down or even a gap up. We haven't come back down in or gone up in. So in this case, we've engulfed in, and yes, we did reject, but still no bull tick. Now, starting to see these cluster of wicks, and we're getting some good TWAP band printing here. It is very tight. It's also sideways. All these wicks down here, we are technically above TWAP, although there's not as much data to start the day, but this is a good start. I'm watching the average tick closures flatten out. I see Vold is starting to trend bullish. That was enough for me to call out on Twitter potential gap fill for Friday morning. Now I did take this opportunity. All these wicks are basing right on second standard deviation low from Thursday's price. This line right here. And I mean, this was a beautiful move. If you went for the gap fill, you nailed about $2. At the peak, I don't know exactly why you would hold all the way there just using internals. I have other reasons of why maybe you would have, but you could have gotten quite nearly $3. So this was a fantastic move. If you were just holding it to hold it, your exit signal is probably going to be a breakdown of first standard deviation. So we didn't actually close below it here, but we did here. So that's a little less than $2. Or if you're really brave, you can hold for a break of this level, which that would have been down here. That would have got you about $1.50, maybe trimmed out here. But, expecting perhaps for some reason trending and maybe hitting previous day's TWAP. But either way, this was a really great trade. We flew through this gap. Very strong candles. This little chunk here was right around the same time tick closures was crossing over zero, ads going bullish, but look at our nasty little friend here, TRIN balance. And that's just gut wrenching to see, considering where TRIN actually was on the charts. I was actually somewhat more hopeful of a little bit of a higher relief, maybe somewhere around the target level here at 449, but sadly not the case. So morning session, we have what we have here, and I don't have the indicator on my chart. I have a tool that measures from the open, and I made a video about this. You can go find it. I think it's 68% accurate levels at open, capturing the price, or rather the expected move, in this case from SPY's options market for 0 days to expire. So the 0 day contracts, you go price a at the money straddle. So you're buying a call, you're buying a put, whatever the price of that is, right at open. You add that price to SPY's current price and you plot that level, and then you subtract from the current SPY price and you write that level as well. TradingView does not have options data, so I have an indicator that plots the lines once I plug in manually the expected move. The expected move was $2.75 today. So from the open, $2.75 gets you basically right there. Now the low leg was not tested at all, and it's kind of neat if you've ever looked up a straddle on any kind of graphing tool. It prints it out pretty much just like this. So you're just trying to capture a break to either side. 275 was the expected move that the options market had priced in for today. That's roughly almost to this one I think was to the cent, the high. Almost guaranteed 90% of the time you will see a reaction off of that. And we did. We saw it twice. That was being defended. We knocked back in here, and as far as I was concerned, once I saw this just absolute nastiness, and then it was all engulfed. I mean, this is 11 o'clock. This is almost an hour's worth of price action engulfed in 1 2-minute candle. I mean, when you see that kind of thing, you don't think quality scalp environment. At least I don't. That was a death sentence to the rest of this day as far as I was concerned. I did share some additional charts, and I think I had a bit of fun and positioned at lows. There's almost no chance in hell that anything was going to happen because we just solidly had trend balance all day. One of the charts I posted on Twitter, I literally was drawing the bing bong on the tick chart, and I mean you could darn near see the same kind of pattern play out right on SPY's price. I mean, this was great in the fact that they were in lockstep. That is what you want to see. But it just means there's nothing here for you. Not really. Maybe if you're a seller, you're selling an iron condor on the day and you're trying to just capture the range, which you can totally do with TRIN if you know what you're doing. Obviously, there's always risks, but if you're just trading 0 day directional trades, no thanks. Yeah, today was really tough. This was a death sentence, this candle, and this right here, breaking back down into daily gap, that's another death sentence right there. If we were going to have a trending day, it's got to basically start within the first hour of the market. Otherwise, it's just not happening. It's just not what trending days do. They don't come and dip back down and futz around with anything. They just get going. So somewhat hopeful, I guess, with this Friday. We did technically make a new low on the week with this gap down, but we did hold this range on the daily time frame, which I don't ever really go I don't really ever go to a higher time frame, but this candle for sure, yeah, this candle here definitely ended on the 50. simple moving average, which is something I look at. Yeah, really close to the 50 moving average. So it's kind of make or break time here. We've come pretty close a handful of other times. End of April, beginning of May, end of May, a handful of times we come pretty close. And if we don't defend it, boy, it's not pretty. We had it here. We did bounce back up $9-10, but then we went 16 down. So I really hope we don't have that in store. But it's anybody's guess as to what's going to happen at this point. I think this consolidation does give me a little bit of hope. Now, if we flip over to the multi-time frame TWAP study, orange is the monthly TWAP, green is the weekly TWAP. So Thursday, we had an insane pump. We reclaimed monthly TWAP, and boy, we just barely missed the weekly TWAP target level of 452. We couldn't clear 75% of this range. There is some statistic, I don't remember where I've heard it, about most ranges don't make it past 75%, which I know this is technically like 78 and something, but it was an interesting statistic that stuck with me. So if 0.5 doesn't break, you got to get through 7.5, and that's fat chance that's going to happen. But so Thursday, we made a new high on the week, which was really bizarre. It just, the price action, just bizarre, where we're making highs or matching the highs, roughly like at the end of the week, or making a new low at the end of the week. Just bizarre. But I guess maybe if you flip your charts upside down, it would be the inverse of like a bull market, where we're making new highs at the end of the week. I don't know. Thursday we make this high, we fail to hold, and to me the death of this was, one, we lost. The death of this week, I should say, is we lost this gap. I mean, we just thrashed right through it, rejected weekly TWAP, and even just lost this other range. And I mean, Thursday was just nuts. It was a $7 range after we already came up almost, $3.50, and that's after a gap up of, you include that, it was almost $6. So we basically did a complete V of $7 on SPY, which I can't recall the last time we've had something like that. I don't know, maybe it was reset and I'm just forgetting. Like, this one looks kind of similar, I guess. But the death sentence, I had no hope by this point. Filled this gap, lost the weekly TWAP after reclaiming monthly. I'll admit my heart sank a little bit here, and then broke down into second deviation on the monthly. I was like, man, what the heck? I had very little hope that this was the low of the week. I didn't know that we'd make it from a gap down, or I didn't think that we would make it from a gap down. But interesting, it did step right on the second deviation low on the monthly, and we come right back to first deviation and just halt. So all of this back and forth, just about every time, not very clean, but it's just right here, and we just couldn't break back through. And this level here, 445, 445 seems to be the new 448. So 448 we struggled with. Monday we bounced on it quite a lot. This is where I was real hopeful, and then all my dreams were crushed here. 445, then boom, 447 or 448, and nope, right back down the next day, right back up, right back down. And here the final hope was just annihilated as we reject, lose 448 again, right back to our friend 445, and then just stair step down the rest of the time. I mean, from the peak of this week The week peak, the low was $8.50 almost from close $6. So ugh, nasty stuff. I mean, I definitely capitalized on these moves, but not what my portfolio was hoping to experience in the slightest. The Qs I know were pretty much going the same as SPY. Yeah, not really any different, but the Russell's Russell's basically the same as well. Wow, Thursday, man, right on monthly TWAP, and then right back down. And their next support level per weekly is it's nowhere. No more weekly TWAP levels. I mean, given that they're all, I believe that these are all weekly, evenly spaced because they're all standard deviation levels. Yeah. So your next one, if my indicator would chart it, would be somewhere about here. So, yeah, we bounced on the fourth deviation low for Russell, which coincides with monthly second deviation low. So we hit that, and we almost hit it again today. Gross. The Dow was stronger today, I know, because some of my Dow positions were actually doing well. Yeah, wow, look at that. Actually, they're flirting with monthly TWAB. Look at this flat, almost, even though we had this volatile move yesterday, we see the bands react a little bit, but pretty much just horizontal flat and not expanding at all. Yeah, I'm not sure what to say here. It looks like Dow is balanced. Dow looks more balanced to me. We had our low, we had our high, we finished in the middle. Very interesting. This is a more classic week. You get your open, low, high, close. So this is probably like a doji then. A Dow a Dow doji daily. Oh god. Okay, I'm sorry. Anyways, let's look at chips. Chips were weak. Mega weak, yeah. Ugh, nasty. We have Nvidia earnings coming up next week, I think. Maybe week after. Maybe it's 2 weeks after, but Nvidia. Stay tuned. What's Nvidia look like right now? Wow. Oh, how the mighty have fallen. Yeah, we've definitely worked back that 480 odd price that we had. Oh man. Yeah, what was it? 470 something. I thought we hit higher than that, but yeah, I thought we were like 480 at one point. Doesn't matter. Either way, wow, that's really cool. So this is something I did want to call out. I've been using this multi TWAP setup and just happened to chart other names, and I'm actually seeing quite a lot of epic setups on these weekly and or monthly levels. If you're not using the TWAP on some of these, mega bajillion cap stocks, I think I'm seeing quite a lot of confluence with these measurements for the highest liquid stocks. They definitely work. These levels serve as support, resistance type setups. I mean, right here, this is quite compelling for me. I don't know about anybody else, but these levels are spot on. So I'm excited to incorporate these into some of my other trading strategies, namely swings and whatnot. But you can see even here on Apple, so many weekly TWAP rejections. Previous TWAP weekly level support bounces. I mean, Apple basically, oh my gosh, an iron condor would have killed this week on Apple. Perfect range bound. Gosh, that's like what, $7 ish of a range. Whew, that's tight. Craziness. Still no real uptick. I'm definitely watching Apple. I'm watching Nvidia. Tech is in huge focus for me for this upcoming week. Definitely check out on TradingView. I published a new indicator called Spider Tracker. If you're into sector analysis, it just plots all the different spiders for each sector. So XLU, K, V, Y, RE, E. There's a bunch of other ones. I think there's 10 total. Like energy's actually been ripping quite hard. Those I'm looking to see if those fall back some, and things like Apple, your big tech names, Apple, Microsoft, Nvidia, if they start to come back up, that could signal a little bit of a relief bounce. Again, with SPY sitting on the 50 on the daily, we could have a good setup here for a little bit of a bounce. But I mean, who the hell knows really with different data releases and news and whatnot. We'll turn the tick levels on here. I did share these on Twitter, and these basically just tell you exactly what you, if you've been using this any amount of time, what you should expect when you see trend balance and you see a tick like this. I mean, even this oscillation from green to red, green, red on the add and volt bands, man, it's just perfect zigzag. I wouldn't even have to look at this chart. If I saw this, I could pretty much draw this blindfolded. Like this is what SPY would look like most likely, just by MIT. But anyways, so these thick levels here, yeah, this is common sense at this point. This is tight range. And we spent the majority, save for this breakout in the morning, the majority of the time right in that 68% first standard deviation. So perfect representation of a statistical chop day. So TRIN, we started outside. We had a couple peaks of no balance, but not anything else. And I was really hoping for, because we flirted with it at the end of yesterday, Thursday, but nothing. I really wanted to come down here. Nope, not yet, they said. The ad, just nasty. If you've seen any of my other videos, you already know what I'm going to say. This here is a range. Very much a range. Vold. Whoa. Oh, I must have replaced my Vold chart with a VIX chart. Here we go. All right. And same thing here. Was more confident early in the morning, like I said. With Vold, we're right there. Like, come on, market, come on. And then no. Nope, never mind. The bull party's been canceled, and you're gonna hate Friday if you're trying to trade directionally for the whole day. So not really much else to say. I'm coming in with a neutral bias on Monday. Not going to expect anything. I'm just going to, as the kids say, be like water. Actually, it's not kids. It's Bruce Lee. This is consolidation. Is it just a pause before more downside, or is it just buying time before another dump, controlled dump on Monday? I don't know. If we see more selling, I wouldn't love it, but let's just get all the selling done on Monday, Monday or Tuesday. Let's just rip the Band-Aid off so we can start heading higher. We'll see. Another video coming out this weekend on a new indicator I've been testing. Some folks have asked, I think maybe I mentioned this one other video. Some folks have been asking for a more simplistic view of all this data here. Now, I cannot promise that it will, for me, it's not replacing this for me. It's not replacing MIT. MIT has nuance that you have to spend time with, both with MIT and as I call them, the naked internal charts. If you're really interested in the internals, you must study these charts intraday. Get your time in the seat with these charts, real time. Watch how these move with SPY. Once you do that enough, I have a friend that I trade with, and we converse quite often on all of this stuff. He's been quite successful with it. You have to know those charts before you really understand what this is showing you. I don't know that you could start with this. I can't know because I didn't start with this. I built it based off my experience with the other chart. I will be releasing this other indicator. It's an RSI type format. It's not going to have a metrics table. It's going to be a lot more simplistic, but I'm going to release it because I have found something in discussions with another friend of mine, a really cool signal, and I cannot wait to demonstrate it. I think it's going to be difficult for me to not keep it on my charts somewhere, but they're already quite busy, so I probably have it set up for alerts, but be on the lookout for that. That should be released, and I'll have a link to it on Twitter. It'll be on my TradingView profile, and I think I've yacked enough for this video, so I hope you had a good trading week. I hope you stayed safe on this nasty consolidation day. Hope you got your piece of it. Have a great weekend. Thank you for watching, and happy trading.